Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and everything in between. I'm your host, Lewis, and I'm excited to share another fascinating story with you today. As we explore the complexities of wealth management and tax planning, a strategy known as buy, borrow, die has been making waves across the Atlantic. This approach, popularized in the United States, involves buying assets, borrowing against them to fund your lifestyle, and then passing them on to your heirs with minimal tax implications. But how does this strategy play out in different countries, particularly in the UK? Our story today takes a closer look at the buy, borrow, die method and its comparison between the US and the UK. We'll examine the key differences in tax laws and regulations that affect the outcome of this strategy. In the US, the buy, borrow, die approach can be an effective way for wealthy individuals to transfer their assets to future generations with minimal tax friction. With a current exemption of $13.99 million per person, many billionaires can work around inheritance taxes using trusts and philanthropy. However, in the UK, the picture is quite different. Inheritance tax starts biting at comparatively low thresholds, with a nil rate band of $325,000 per person. This means that UK residents who try to use the buy, borrow, die strategy may face significant tax liabilities when passing on their assets to their heirs. We'll take a closer look at some examples and expert insights to understand the implications of this strategy in both countries. While some investors might still find ways to use leveraging to their advantage in the UK, it's clear that inheritance tax will play a significant role in shaping their financial plans. As we navigate the complexities of wealth management and tax planning, it's essential to consider multiple perspectives and seek professional advice before making any decisions. The buy, borrow, die strategy may be an interesting approach, but its effectiveness depends on various factors, including individual circumstances and geographical location. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of market trends and analysis. Our middle segment today is all about the latest developments in the Indian equity market. The Nifty 50 has extended its winning streak for the second consecutive week, advancing 1.5% for the week ended September 12, 2025. This is despite foreign institutional investors continuing to pare their holdings, with outflows totaling Rs 11,169 crore in September up to the 12th. Now, our experts have been analyzing the market trends, and they've identified some key time clusters that traders should keep an eye on. According to Harshub Mahesh Shah, director at WealthView Analytics, these time clusters often coincide with intraday reversals or momentum shifts. The highlighted time clusters for September 15-19 include specific times on each day, such as 11:15 a.m., 1:15 p.m. on Monday, and 9,030 a.m., 11,045 a.m. on Thursday. It's also important to note that support and resistance levels are crucial in navigating the market. For the Nifty, support is placed at various levels, including 25,080, 25,035, and 24,014.5, while resistance is seen at 25,045, 25,032, and 25,034. As we move forward, September 18 and 19 are expected to be crucial sessions, with momentum moves anticipated. Traders should be prepared for volatility around the highlighted time clusters, presenting opportunities on both the long and short side. Risk management is key, and it's essential to maintain discipline and avoid chasing gaps. We'll continue to monitor the market trends and provide you with updates and analysis. Remember, it's essential to stay informed and adapt to changing market conditions. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got a great closing segment for you today, folks. As we wrap up our discussion on market trends and investment strategies, let's take a look at some current events that might impact your financial decisions. We've been following the story of mortgage rates and their potential effects on the housing market. According to recent reports, the national average 30-year mortgage rate is currently sitting at 6.28%. Now, this might not seem like a significant change, but it's essential to consider how these rates can influence your purchasing power or refinancing options. On one hand, with mortgage rates at their lowest point since October 2024, now could be a relatively good time to buy a house or refinance your existing mortgage. However, it's crucial to remember that trying to time the market can be challenging, and the best time to buy is typically when it makes sense for your individual circumstances. On the other hand, if you're considering an adjustable rate mortgage, ARM, you should be aware of the potential risks involved. While ARM rates might be lower initially, they can increase over time, making your monthly payments less predictable. To make informed decisions, it's essential to stay up to date with market trends and consult with financial experts. We'll continue to monitor these developments and provide you with balanced insights to help you navigate the complex world of finance. In other news, we've seen some promotions from lenders, such as Chase Home Lending's mortgage rate sale, which might offer attractive rates for home buyers. However, it's vital to carefully review the terms and conditions before making any decisions. As we conclude today's episode, remember that investing always involves some level of risk. It's crucial to assess your financial goals, risk tolerance, and overall situation before making any moves. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.